Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're jumping down into the world of Bitcoin, taking a look at what has been going on most recently, what we think is likely to happen next and all that wonderful stuff. As I get into this video, if you do find it useful and informative, smash that like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, guys, check it out, linked in the description down below. It's the first place we go to notify you of the ins and the outs of everything that is going on in the crypto space. Don't miss a trick by joining us down in Discord. Now in this video I am going to be applying Elliott-Wave theory, and if you're not familiar, check out the 𝗕𝗘𝗪𝗧𝗏.com, linked in the description down below. I have created a 21-part video course explaining Elliott-Wave theory in a lot of detail, so you can not only understand the different waves and the different structures, but also how to draw it and how to trade it. If that sounds of interest to you, check it out in the description below. There are also a host of additional courses that we are looking to do on the Cheeky School, so well worth bookmarking it for future reference as well. Okay, let's jump down into this. Bitcoin paired up with USDT on the hourly chart, and Binance is our data source. As you can kind of see, we're fighting up against a little bit of resistance, a little bit of selling pressure. The price is pushing up, liquidating people and pushing back down again, liquidating those longs and shorts all at the same time on those micro timeframes. So what we're going to do is we're going to try to ascertain where we are in this current little area just here, and whether or not we're heading down into our yellow box areas that we drew this morning on the Twitch stream. So let's go ahead and check this out. So straight off the bat here, we can kind of see that we have some interesting kind of structures going on, right? We pull back down, we push back up, and so forth. And, you know, for the most part, it's actually pretty much looks like it's completing its structure. If I go ahead and move these fibs, pull them over to this low point just here, you can kind of see our one-to-ones right here, and we haven't actually closed above it by the looks of it. So if I actually draw in a little rectangle, just right here. Okay, we went up to the 1.236, 1.272, just in between those two levels actually. But if I draw this on here, we can kind of see that this area is an area that we've kind of gone up into a couple of times, but have not been able to close a position inside it or even above it. So if we kind of fill this back down a bit and we pull it across this way, we can kind of see that there's a bit of common understanding here, that we can see that these two particular wicks on this end actually meet up with this wick on this high end. We can see that here was a little bit of closing positions, but nothing terribly too much, kind of giving this area confidence of thinking that it's just a regular kind of zone. Instead, it looks like it was previously demand turned into supply. So again, interesting kind of concept there to keep an eye on. So it does look like we kind of completed a three-wave structure, but it could also look like a WXYXZ, which would be WXYXZ kind of scenario like that. We don't want to get too carried away, but it could also be the beginning of maybe a five-wave structure. 1, 2, although wave 3 would be incredibly low, we'd have to look at it as probably a contracting triangle or contracting diagonal, and to kind of make it work. Don't really like the idea, so I'm going to kind of ignore that part for now and just kind of think of it as corrective overall. The other thing we've got to kind of consider, of course, is this high point just up here. Okay, and if we take into consideration this high and this low with this recent high here, and the fact that we are, if I come up here, overbought on our 1 hour chart, I think we should be thinking maybe there's the potential for downward price action. So if we go ahead and measure from this low to this high and move this over to this existing high point just here, and that's been achieved in the last 1 hour, then of course we can say, okay, yeah, there's the potential to come down into this low at $16,334. That would look like this. It would be an A, B, C structure right in here, or more specifically WXY, you know, but I much prefer to use ABCs. So you can kind of see that right in there that we end up with this little yellow box area that we drew on our stream this morning, and this kind of conforms into a bit of a move in here as well. If I draw it in, A, B, and then all of that would be our C. So it does look like this is actually going to be our area. Now, if we come back to this area over this far on the right-hand side, left-hand side, we can see that from November, this was an area of previous demand that turned into resistance and then back up into demand. And all we're really doing is looking to see whether or not this area is going to continue to be demand, because if this is, then this is the area that we look for the reversal and we start to see a bit of a bounce to the upside. Okay, so everything looks like a move to the downside is highly likely, and that we should, not get too carried away thinking the price is going to the moon. We are below the 200 EMA on this hourly chart as well, so we've got to consider that. And in fact, if I go ahead and dive down into the 4-hour chart, bring this up, you can see also the 200 EMA is up there as well. So everything looks like it's just mid-structure, just looking to come on down, meaning that there's potential trading opportunities in this low range overall. On the 8-hour chart, you can again see that 200 EMA is really high. We're well below it, so there's nothing bullish here that to kind of get us too carried away. I do think on these larger timeframes, specifically the daily, what we've got to do is eventually potentially move up just a fraction further before coming down into these low ranges once again. Under a bigger kind of 3-wave corrective structure. This is really visible from the daily chart. And also, on our daily chart here, you can kind of see that we are in the higher highs and the higher low trap. These are very, very common. We see these time and time and time again. And so a move down towards our lows between kind of 13,002 and 14,002 seems to be a pretty obvious area to kind of be thinking about, specifically when we start thinking about where the next kind of weekly levels of support are to be found. They're actually between 11,600 and 13,900. So that $13,000 range, I think, is really key for us, specifically when we think about this daily chart and the progression to the downside. Now, overall, we're not seeing any kind of major players coming into the space. There's a loose stuff going on with kind of micro strategy, but there's no big institutional players. You can see here actually we're breaking down from this area already. We can adjust this a fraction if we need to, but again, all we're going to do is keep knocking this out of kilter. So I'm not confident in thinking that we are done and dusted with any of this. I do think that there is limited progression here for BTC, and yeah, essentially we are looking to break on down. So we can keep finessing that if we want, but eventually we're going to come down into new lower lows, and then obviously from there we're going to completely crumble to the downside, in my opinion. So pretty much everything as usual here, nothing terribly too much to be unexpected. A move down, I think, on the shorter time frames is key, and then a bit of a move to the upside on the daily before potentially coming down significantly further. Now, I would not expect us to come up higher than our 16,790 $1, but it's possible, so we'll keep that in the back of our heads. It's actually 16,785. If we go up higher than that, then this particular structure to the downside is invalid, and yeah, we can just start to review what that might mean going further forward. But for now, this area of selling pressure seems to be holding up right here. From a liquidity point of view, there's a lot of liquidity down in these lower ranges, not so much in the higher ranges. We'd have to push up above the 200 EMA on this hourly chart to really pick up. There's a little bit of liquidity right here, though, at 16,666 or 16,668. A little bit of liquidity there. We could see a wick grab that before coming down to pick up this other liquidity down a little bit lower. So essentially, yeah, I do think that we're going to see a bit of a move to the downside here, which lines up to many of the other cryptocurrencies also looking to finish off fifth wave structures before moving to the upside. So I'm going to leave this video right there, guys. If you have found it useful and informative, smash that like button. I do appreciate that. If you're new, subscribe. Remember to join us down in Discord if you want to stay up to date with the ins and the outs of everything that is going on in the crypto space. And if you want to know a little bit more about Elliott Wave theory, check out 𝗕𝗘𝗪𝗚𝗠𝗀𝗠𝗀𝗠.com, linked in the description below. Until the next one, guys, have a fantastic day.